Hi again, everyone. It's me, your host, Tyler. Before we dive back into the MSTR company deep dive, let me tell you, this podcast is brought to you by Bang Energy. When I need to crush a project, I grab one of these. With 300 milligrams of caffeine, it's enough to get me and you through anything. Get yours wherever energy drinks are sold. In the fourth quarter of 2024, Strategy officially qualified for inclusion into the Nasdaq 100. The most recognizable fund that this index trades under is the QQQ ETF. In early December, it was announced that Strategy would join Palantir in the index for the first time. The stock price was soaring, and a few weeks later, MSTR officially joined this exclusive tech club. This opened the floodgates on passive investments coming into the company. With Strategy's recently reported $14 billion gain in quarter 2, they officially qualified for S&P 500 inclusion. Being included in this index of the 500 biggest American companies dwarfs the size of the fresh capital inclusion in the Nasdaq. The S&P committee meets at the end of August 2025, and September 19th is when inclusions are to be announced. Here at Treasury Orange, we give 70% odds of inclusion at this time. If they are shrugged off this quarter, that's okay, because inclusion is inevitable. Corporate types can ignore Bitcoin and BTC treasury companies for only so long. Traditional analyst shops still haven't upped their game in understanding the performance of MSTR's stock. At best, they think it's just an over-leveraged Bitcoin play. And most of the time, they don't account for the effects of Bitcoin gains whatsoever. This brings us to how the market actually values Strategy, and it's fascinating. Strategy's stock has a beta to Bitcoin of roughly 2 to 2.5, meaning when Bitcoin moves 10%, Strategy typically moves 20 to 25% in the same direction. Of course, that's not a hard and fast rule. It makes sense given their leverage and the fact they're somewhat of a leveraged Bitcoin play with operational cash flow. But the key metric is that multiple to net asset value, or MNAV, we talked about in episode 1. Why would investors pay that premium to net assets? The premium exists for several reasons. First, convenience. Many investors can't or won't buy Bitcoin directly, so they pay up for regulated stock market exposure. This is a lazy reason some of the premium exists, and it's become less meaningful as time goes on. It does, however, have an outsized impact on some Bitcoin treasury companies in other jurisdictions, such as Metaplanet in Japan. Secondly, leverage. You're getting leveraged Bitcoin exposure that was originally leveraged by their convertible debt structure. Now, it's buoyed by its preferred equity yield curve. Third, growth expectation. The market believes Strategy will continue growing their Bitcoin per share faster than Bitcoin's price appreciation. Bitcoin per share is simply how much Bitcoin they own divided by their share count. Fourth, operational optionality. Their software business provides a smidge of downside protection and additional cash flow for paying those preferred dividends. Historically, this premium has ranged from about 1.5x in bear markets to over 4x in peak euphoria. The current 1.5 to 1.7x feels low to us for a secular Bitcoin bull market. We're currently harboring some cautious optimism that this premium will rise. You cannot analyze Strategy without understanding Michael Saylor, because this entire transformation is his vision. Saylor founded MicroStrategy at age 24. He was CEO for over 30 years, built a successful software business, and then had the conviction to bet his entire company on Bitcoin when he felt like it was merely treading water. He believes he was built for more.
So what is it that's dissatisfying you exactly?
What's dissatisfying is to think that you peaked 10 years earlier, you've hit a plateau. What's dissatisfying is to see the Elon Musks or the Mark Zuckerbergs, of the world have extraordinary success, and you grow up in that generation and you feel like you hit the wall. They launched the Instagram, they launched the Facebook, they launched the electric car, and you somehow have created this it's a successful business, but it's now a low-growth business.
Why in the world do you think that particularly disturbed you and drove you to seek other avenues of expansion?
I just thought, is this all there is? There's got to be more. I wanted to change the world. You know, when you start and you think you can change the world, and you get to some point where you realize you fulfill 2% of the demand of a given niche of the world, which has now become a mature cash cow business, and the world's done with you.
Do you have any idea where that ambition came from?
Oh, must have come from my mother.
What impresses me about Saylor is his communication effectiveness. He's become one of Bitcoin's most articulate advocates, appearing on every major podcast and conference. He doesn't just buy Bitcoin, he evangelizes it with religious fervor. There's definitely cult of personality risk here with Saylor. His commitment level is both strategy's greatest strength and potential weakness. He's all in on Bitcoin succeeding, which is great for conviction, but creates key man risk. Beyond Saylor, the management team is solid. The current CEO who took over from Michael is a sharp guy. His name is Phong Le, and not only does he oversee the software business, but he is all in on the Bitcoin strategy. The concern is succession planning. At 60 years old, Saylor isn't going anywhere soon, but this strategy is so tied to his vision that any leadership transition could be rocky given Saylor's entrenched position in the Bitcoin community. From a governance perspective, Strategy operates like a controlled company, even though Saylor owns less than 50% of his shares. His vision drives everything, and the board generally supports his Bitcoin strategy. For us, this concentrated decision-making is a feature. We're betting on Saylor's vision. The limited independence could be seen as a bug, but Michael Saylor has structured his team as one with an aligned and purpose-driven vision. Let's talk about what could go wrong, because with strategy, the risks are as amplified as the rewards. Price volatility exposure is the obvious one. If Bitcoin falls 80% like it did in previous cycles, Strategy's stock could fall even more due to its leverage and sentiment effects. Their current structure can handle this. Remember, they maintained a large debt coverage ratio, but it would be painful. Regulatory risks are more concerning. If major jurisdictions ban Bitcoin or impose punitive regulations, that could have downward pressure on Bitcoin's price. Saylor argues Bitcoin is too big to ban now, but regulatory risk remains real. While the current administration and SEC are favorable, if not outright boosters of Bitcoin, a change in leadership at the federal level in the United States could have some negative short-term effects on Bitcoin's price. Led by people like Michael Saylor and political organizations like the Bitcoin Policy Institute, Bitcoin seems poised to stay politically favored in the near term. Bitcoin Magazine CEO David Bailey has close ties to the Trump administration, and a number of Bitcoin PACs supported both Republican and Democratic candidates in recent years. Custody and security risks are actually minimal. Strategy uses multiple custodians, including Coinbase Custody, and their security practices, while criticized as a honeypot by a lot of Bitcoiners, have proven to be robust at protecting Bitcoin throughout the years. The biggest risks might actually be sentiment-driven. They've taken great lengths to mitigate the company's specific risks. Although core business decline is ongoing, the operational cash flow has become less and less important as the volume of trading on their stock has grown. They basically tap debt instruments to pay their liabilities, which are trending more and more to be only the dividend payments. If Bitcoin grows like they think it will, they should be able to pay these dividends by raising capital even in bear markets. Debt covenant risks are manageable, but they're worth monitoring. If Bitcoin fell dramatically from here, say 50%, and stayed down in that range for years, they actually have 60 years worth of dividend payments at today's obligations. Now, Strategy have said they are never selling their Bitcoin. It would eventually become hard to raise capital though at attractive terms if we had a sustained bear market. While we here at Treasury Orange do expect some difficult bear markets in the future, we also expect their impact to be less than the previous 80% drawdowns. If the going got tough, Strategy could return to the convertible bond market or take on some more traditional bonds at higher interest rates. Concentration risk is massive. They're essentially a single asset company now. If Bitcoin fails as a store of value, Strategy fails as an investment. While we don't anticipate this happening, we could be wrong, but we wouldn't be here telling you the Strategy story if we were this bearish on Bitcoin. Alright, the moment you've been waiting for. Where does strategy rank in our comprehensive rating system? Let's go through our 7 categories. Commitment to Bitcoin strategy, 5 out of 5 stars. Nobody comes close to Strategy's commitment level. They've bet the entire company on Bitcoin. Key people, 5 out of 5 stars. Saylor is exceptional, far outweighing his key man risk. Leverage posture, 5 out of 5 stars. Their pristine balance sheet with their intelligent debt structure is unparalleled. Intelligent stacking, 3 out of 5 stars. Their continuous buying strategy is smart, but not perfectly timed. We can't knock the face-melting amount of Bitcoin they've acquired, though. Their growth potential and moats, 5 out of 5 stars. They have a first-mover advantage. They have scale benefits and operational cash flow to create multiple moats, including both a deep and wide preferred equity structure. Overall metrics, 5 out of 5 stars. They have best-in-class risk-adjusted Bitcoin per share growth and debt coverage ratios. Community engagement, 5 out of 5 stars. Saylor's evangelism has created a devoted following. Strategy earns our S-tier rating. The S is for strategy, and truth be told, we couldn't confine this company to even our A tier. We had to make a whole new category. And these guys may be the only company that will ever receive this designation. Here's why. They're the pioneer and industry leader. They've proven execution over multiple Bitcoin cycles. They maintain pristine leverage ratios while achieving massive Bitcoin accumulation. They have sustainable funding models and exceptional transparency. Heck, they might even enter Mag 7 levels of valuation in the not-too-distant future. Strategy is poised to become one of the world's biggest companies. More importantly, they've created a blueprint that other companies are now copying. When we analyze every other Bitcoin Treasury company, we're essentially asking, how do they compare to Strategy? So, who is Strategy for? This is for you if you want leveraged Bitcoin exposure through regulated markets, you believe Bitcoin will outperform traditional assets long-term, including US equities, you're comfortable with high volatility in exchange for high potential returns, you trust Michael Saylor's vision and execution, and you've built enough of a Bitcoin stack to secure your future and you want a little more juice. This is not for you if you want stable, predictable, boring returns. You're uncomfortable with single asset concentration risk. You prefer diversified business models, or you can't handle 50% plus drawdowns. Strategy is the purest expression of corporate Bitcoin adoption. If you believe Bitcoin succeeds long term, Strategy is likely to be one of the biggest beneficiaries. Well, that wraps up our deep dive into Strategy, our first and only S-tier Bitcoin Treasury company. If you found this analysis valuable, here's how to stay connected with Treasury Orange. Subscribe to our free weekly newsletter where we track all the major developments in Bitcoin Treasuries. You'll get exclusive insights and early access to our research at treasuryorange.com. Whether you're a corporate treasury team evaluating Bitcoin adoption, an institutional investor building exposure to this space, or a retail investor looking to level up your analysis, our premium research gives you the edge you need. Next week, we're heading to Japan to analyze Metaplanet, a fascinating company that's following Strategy's playbook in the Japanese market. Will they earn A-tier or B-tier status? You'll have to tune in to find out. Don't forget to hit that subscribe button, ring the notification bell, and if this analysis helped you understand Strategy better, drop a comment below with your thoughts. We hope we've covered all your burning questions about MSTR. The biggest question I have right now is, how many Bitcoin will Michael Saylor buy next week? Until next time, this has been Treasury Orange. Stay orange, stay informed, and we'll see you in the next deep dive.